Hi, I'm Paul Hefner, the CEO of Finance Pals. We're a fractional CFO firm that also does bookkeeping and tax. And today I'm going to be talking about what a fractional CFO does and what fractional CFO services are. Let me share my screen here. Okay, let's hide this thing. I don't know how to. Okay, I'll put it down here. So here's my background. Not a lot of detail here, but I'm basically, like I said, the owner of Finance Pals. You can pause this and look at it if you want to learn more about me. Let's see how we go to the next slide here. What is it? There you go. So here's CFO responsibilities. So before we talk about fractional CFO specifically, wanted to give a quick overview of CFO in general. The first piece is they do sort of all the historical reporting. So the bookkeeping, the accounts payable, accounts receivable, all of the accounting entries, all of the financial reporting, financial statements, all of those things, the historical stuff, the CFO is ultimately responsible for. Might be internal audit, other things like that as well. There's also HR and payroll, onboarding new people, and all the compliance for all of those things. And now we come to the sort of the green section, which is more what I would call the sort of fractional CFO stuff. The ones in black, if you're a bigger company, the CFO is responsible for it, and fractional CFOs can help out with those things, but they are more focused on the green things. And you might have an outsourced bookkeeper or an admin assistant, or you might be doing the bookkeeping yourself if you're a smaller business. So the first one is forecasting, planning, and strategy, which is sometimes called FP&A or financial planning and analysis. It's the opposite of the historical stuff. It's all the forward-looking stuff. It's the what we think is going to happen. And then there's also the funding and cash management. So it's helping to raise money. It's helping to work with banks, investors, reporting to investors, and all the cash management. So how much money do you need? Making sure you don't run payroll and overdraw the account. All those types of decisions and things are what fractional CFOs can help with. And we'll talk some more about the areas in green now. The first thing I like to think about are what are some of the questions that a fractional CFO can help you as a CEO or a business owner answer? And the most common one is, what's revenue and profit going to be next month, next year, 5 years from now? Understanding sort of those goals and targets and budgets is sort of the most simple question that a fractional CFO can just help you answer. The next one is, how many people you're going to hire and when. Payroll costs are usually companies' biggest cost unless they have inventory or other cost. And so understanding, if you're going to hire 3 new sales reps, or if you're going to hire 3 developers or 5 developers, and understanding those costs and what the cash impact is going to be to the business is super critical. The other side of that is where you can cut cost. So understanding, is there certain economies of scale coming that you can, leverage up, and you'll then have to pay more for rent, or it could be, looking at all your different software costs and finding ones you don't use anymore. Lots of areas to find cost cutting stuff. And then the more fun side is, where to invest more money. So you're going to spend more on marketing, you're going to spend more on sales reps, you're going to spend on technology that'll make your company more efficient. All those types of investments are things that need to be modeled out and understood. And once you have all those sort of inputs, then you start to answer questions like, how much more money do we need, um, and sort of where are we going to get that money, I guess. And then the last piece is understanding scenarios like increasing pricing, expanding to a new region. It can be taking all the scenarios above around hiring people and saying, what if we hire 3 people? What does that do? What if we hire 10 people? What does that do? What if we do all these different things? They can have scenarios sort of built on top of each other to sort of say, what is our path to profitability, or what if we raise 500K, what if we raise 1 million? All those different scenarios can sort of be played out and understood to understand what what the correct operational plan is. And the way that a fractional CFO does that is to use some of the tools or analysis on this page. So the most basic one is the 5-year forecast. So this usually goes by month on all the different aspects of the business, and it's not just saying, hey, we're going to have $10 million and next year. It's looking at how much money you're going to spend on Facebook and how many customers you're going to get. How much money you're going to spend on trade shows, and how much customers you're going to get. If you hire 3 sales reps, is it a 3-month ramp up? Then they get 1 customer, and then they get 5 customers, or there's seasonality where they get most of the customers in the summer or in the winter or whatever it is. Building out all those, very detailed forecast of what your customers are going to be. And the next part is the cost of goods sold. So what it costs to sort of service that revenue. So if you're a service company, you have to hire staff to to provide those services. If you're inventory or a product company, you're going to have to pay manufacturers and buy the inventory before you can sell it to your customers. And if you're a software company, you might have hosting costs, other things like that in there. If you're a software company, you'll also have other things outside of cost of goods sold, like development costs and things like that will be on the balance sheet and eventually depreciated and expense. But all sorts of costs you need to think through. And then the operational costs, like the payroll costs we've already mentioned, are usually the biggest cost. There might be other fixed costs like rent, where you might, no matter how many new customers you get, um, or how many new staff you hire, you might be in a fixed office space. Sometimes rent can be flexible if you're in a co-working space or working from home or other things like that. But usually there's certain costs. Maybe you're well, what's another one? Just simple ones like you might pay an accountant every year, and no matter how much money you make or how much money you lose, you're still going to pay that accountant a certain amount of money to do your taxes, or you're going to pay certain legal fees, and it doesn't matter how many customers or different things you have. And also sometimes fixed costs can include fixed payroll costs, like maybe you're paying yourself a salary, and a lot of times, no matter what, you're going to pay yourself a salary. Excuse me. And then after they have that forecast, they start to do a variance analysis to make the forecast better. So every forecast is inaccurate, but you can make it better and better so that your company is understood and you can make better decisions. So one of my favorite questions from CEOs is sort of how much cushion they need in their bank account. And the answer is 100% depends on how accurate their forecast is. If their forecast is really accurate, they don't need much cushion. If their forecast is, I don't know, it's sometimes we miss it by 20%, sometimes it's 30%. We don't really know what's going to happen next month. Then you need more cushion. And these monthly analysis can also include key performance indicators or KPI reportings on certain sales metrics like leads, new customers, cost to acquire a customer, the lifetime value, churn. It can include things like employee turnover, all sorts of metrics that are key for that company. And another tool that fractional CFO uses are meetings with CEOs or other operational leaders, depending on how big the company is, to understand their plans. You might be meeting with a VP or director of marketing to say, hey, we're going to go to twice as many trade shows this year. And that type of information needs to be layered into the forecast so that we understand, what those costs are going to be. Or they might be saying, hey, we're going to, we have a big deal that's about to close. And so you want to forecast, all that revenue or even cost if there's, people you need to hire or different things like that. So it's understanding those operational plans. Otherwise, you will have a lot of variance unless you have those sort of inputs from the different teams. From a cash standpoint, you want to look at a 13-week cash flow forecast. You want to understand your cash flow forecast, monthly as well for longer term stuff. But if you're a high growth startup that's raising money, or about to run out of money, you'll need to know exactly how much cash you have. You need to you can sort of delay running out of cash a little bit, but you'll still want to know the timing of some of those things. And also week to week and month to month, your cash flow may change. You might get all of your revenue on the first of the month, and then you might run payroll twice that month, and then so by the end of the month, your cash is the lowest, and then by the first of the month, it's high again, and then so you need to forecast not just your sort of monthly cash, but sort of what it is month to month. So you can understand, is there a week sometime when that second payroll goes through, where your cash goes lowest each month. And then lastly, a good fractional CFO has a great network of bankers to get debt financing and other loans from, lines of credit, things like that. Asset-based lenders to do factoring on inventory, accounts receivable, or other things like that to get sort of, I don't know, pay a little more, but to have a little more flexibility and maybe not for people that aren't quite ready for traditional loans. And then also investors, angel or venture capital people that invest in certain sectors or different things that can help get companies going. Let's see. And so with that, I'll say thank you. One other thing, I'll list some of these tools, like the 13-week cash flow forecast. I'll put a link in the notes somewhere, so you can look at that. I'll have some other links as well. But if you have any questions, I would love an email. So shoot me an email. And otherwise, I'll say thanks for watching and have a great day. Thanks. Bye.